As a real estate investor, most of the time we would like to use leverage to increase our return on the investment. So we always talk about cap rate and interest rate. How do we make money when we underwrite a real estate investment? On multifamily, most of the time we would like to see what the cap rate would be on our investment, especially the capped rate we purchase. The higher cap rate you can get into a deal, the better price you probably could get. For example, an NOI of 200,000 and the cap rate of this deal is 5%. What's the price you can get? 4 million. What if we can get this deal with a 6% cap rate? 3.333 million. If we are a buyer, would you like to pay 4 million or would you like to pay 3.33 million? Of course, I would like to get a same deal with 6% cap rate instead of 5 because I only pay 3.33 million instead of 4 million. But as a seller, of course, you would like to sell your deal at a lower cap rate, right? That way you can get paid more. So just depending on what position we are in. Next, let's look at interest rate. As an investor, we would like to take certain leverage on our investment to get higher return on any of the investment. Real estate is one of the investments that we can leverage other people's money to increase our return on the investment. For example, today if I want to get an agency loan, Fannie or Freddie, probably the interest rate on multifamily would be about 5.5 to 6.25 or even 6.5 depending on where the property is. So for example, let's say 6% when you borrow money from either agency loan or the bank, and your entry cap rate is 5%, and your rent to all your units, your apartments, it's pretty much to the top of the market already. There's not too much room for you to grow on the rent, even you have any vacant or to renew any of the old leases, which means you won't be able to increase too much on your revenue each month or each year, but pretty much your operation expenses will increase a lot each year. No matter just the repair or regular maintenance material, your payroll to your employees, even you pay to your contractors, everything increased every year in the past 11 years since we started investing in real estate. We haven't seen anything really drop at all. And then your property tax, your property insurance, the general liability insurance, even the cost that you pay for your employees' benefit like health insurance or any eye care, dental care. If we couldn't increase the revenue on a property or your investments and your operation expenses increase, that means your NOI decreases. Even with the same cap rate that when you acquired the property, you will still lose money if you want to get out of the investment. So if your interest rate is higher than your cap rate, when you purchase a multifamily, easily you are set up yourself to lose money. We don't want to take that kind of risk on our investment. Most of the time, we would like to get any deal with a higher cap rate than the interest rate we can get, unless you're getting those distressed properties, which property's condition is really poor, and then the occupancy is really low. You have room to increase the occupancy to increase the revenue, and you have room to spend money to turn over to do some rehab on a lot of the units that would help you to increase your income, and you can maintain your operation expenses or at least make your NOI higher. That way, if you get any that kind of deal, you will be still able to make money. If you got a deal, you will not have any room to grow your rent. You won't be able to increase your income or revenue, but you also cannot control your operation expenses the same as the moment you got the deal. It's very risky for yourself or your investors. So if the cost of your borrowing is higher than your property is generating, you are essentially using expensive money to buy a lower yield asset. This situation is called negative leverage, and that means you are adding debt to reduce your income. It doesn't mean a negative leverage means a deal is a bad deal. If you're getting a deal that the income is getting so tight to grow or just no room to grow, that means you are taking a big risk on your leverage or your investment. So choose your debt wisely or get your investment wisely. Don't just jump into a deal that would hook you up and you cannot get out of it, or you will lose your money. Because a lot of investors in the market would like to ask, can I buy this deal? But the real question is this asset actually working for you, or you have to pay the deal each month out of your own pocket to make yourself survive? Negative leverage isn't illegal, it's just unforgiving. In a hot market, negative leverage hides all the risks. In a downturn, it will show up really fast, like in 2025 and this year 2026. We saw a lot of distressed properties. Pretty much most of these deals, either they got too high on the leverage or they got into negative leverage, which means the interest rate they were paying was too high and their property cannot survive themselves paying the expenses plus the interest rate from its own income. So our goal isn't the highest return on our investment. It's about how long we can survive in the downturn.